Bent Business Basics. I'm a second year business major and I teach as I learn. I post videos that are business related with slides and examples to increase your knowledge and get familiar with accounting, marketing, economics, and finance. For more content, please follow my Instagram and TikTok at Bent Business Basics. Today we're going to talk about what is accounting. Most people think accounting is just about taxes and heavy math, but it's actually the GPS for your business. If you don't understand how your money moves, you don't truly own your business. Whether you're launching a side hustle or managing a global corporation, the rules are exactly the same. In this series, we're stripping away the complexity to give you a 3-step framework used by every professional accountant. Let's just start with the basics. I will post videos going further into detail of every topic we cover in this lesson. So really, what is accounting? Accounting is a system that we use to track every dollar that moves in and out of a business. To understand accounting, you don't need to be a math genius. You just need to see the story. Every dollar that moves through a business follows a specific 3-step cycle. First, we have our inputs. This is the raw data of every sale and purchase. Then we have our process, where we use the golden equation to organize the data. And finally, we create the outputs. This is the high-level reports that tells you exactly how healthy your business really is. Every story needs a beginning, and in accounting, the beginning is the input, also known as your transactions. Think of this as the raw data of your business. We're going to break this down into 3 sections. First, we have our sales. Sales is anything that has to do with selling a product for cash, trading an item for money, or providing a service, like cleaning a house or a car. Every time a customer hands you $5 for a latte or $20 for a bag of coffee beans, that's an input. It's value coming into the business in exchange for what you provide. Then we have our purchases. Purchases consist of buying an item, subscribing to a website, or ordering supplies. In our coffee shop example, these are the items we bought to run the shop. To sell those lattes, you had to buy milk, coffee beans, and sugar. These are the operating inputs. These things you need to buy to keep the shop running. And number 3, we have payments. Payments is money sent to pay bills, to pay a loan, and to pay credit card statements. This is the money sent to cover your obligations, like paying for rent, electricity bill, and your employees' wages. Without these inputs, there's no story to tell. But once we have them, we need a way to organize them. And that brings us to the process. Now that we have our inputs, like the latte sales and the milk purchases, we need to process them. This is where the accounting equation comes in. Think of this as the perfectly balanced scale. We also call this the golden equation, and that is assets equal liability plus equity. On one side, we have the assets. This is what you have. It all consists of cash, equipment, and inventory. It's the cash in the drawer, the expensive espresso machine on the counter, and the bag of coffee beans in the back. These are the resources you use to make money. In the middle, we have our liabilities. This is what you owe. It consists of account payables, loans, and unearned revenue. If you took a small business loan to start the shop, or if you bought milk on a credit card and you haven't paid it yet, that is a liability. It's someone else's claim on your assets. And finally, we have equity. It's what you own. It's the owner's cash, profit, and true value. It's the true value of the business that belongs to you after the debts are handled. Every single latte we sell or bill we pay is recorded so that this scale is always balanced. Assets equal liability plus equity. If one side moves, the other one must move with it. Finally, we have reached our outputs, also known as our financial statements. This is where the magic happens. After we've tracked our sales and balanced our equation, we generate the reports that tell us the story of our shop's health. First, we have the income statement, and it answers the most important question. Did we make profit or did we lose money? This is made of the revenue, expenses, and the bottom line, also known as your results. Think of this as your performance review. It takes all of your latte sales and subtracts the cost of the coffee beans and the rent. So we look at it as latte sales minus supplies, rent, bills, and that equals profit. Next is the balance sheet. This is a snapshot of your business at its exact moment. It consists of assets, liability, and equity. It shows exactly what we talked about in the last step. What you have, like your espresso machine, versus what you owe, like the equipment loan. It tells you the true value of what you've built. Now we move on to cash flow statements. This is your money tracker. It keeps track of all your operations and how much we're selling and buying. A business can be profitable on paper, but still run out of cash. This report ensures that you have enough actual dollars in the bank to pay your employees and buy more supplies for the next day. When you read these three statements, you can stop guessing and start leading your business with confidence. In the next lesson, I'm going to show you how to use the golden equation. I'm going to represent examples on how to use the double entry system and how does it function. We're going to learn how to read and use balance sheets, income statements, and cash flow statements.